Good morning.
Hi, Drew. How are you this morning?
Good. How are you?
Awesome. Hey, thanks for joining me on Zoom podcast. We're doing all the technology today, right?
Awesome. Yeah, it's great. Thank you so much for the invite. I appreciate it.
You bet. We're gonna see if Ben gets in here. I mean, we're a little early, so that's good because there's a little bit of lag time apparently. We're gonna see if this is actually gonna work. It'll be fun, right?
Yeah, absolutely.
Well, I appreciate your busy schedule allowing for this today. There is so many conversations about mortgages and lenders and the process and realtors and all the dirty news that's out there sometimes is just like so negative that we have
Yeah,
to be able to provide information so that the consumers really know what's going on.
yeah,
Um,
I agree.
I think more importantly, so that the consumer feels like they can ask the question and get an honest answer. Or if I don't get the honest answer or I don't get the answer I like, then I ask somebody else. And if you keep getting the same answer, well, then you probably know it's legit, whether you like it or not. But
Hmm.
um, yeah, so we've got Ben coming in, which is nice. We've got our other lender on here. So we'll
Yeah.
throw that question out there again as soon as we get him settled and acclimated to being on camera. Hopefully he's coming on camera because we don't want a black screen on here.
Right.
There he is. Hey Ben, how are you doing this morning? Oh, got you on mute.
How about now?
There you go. There you go. How are you today?
Doing great. How about you guys?
We're good.
Good.
Good. I think you probably have better weather today than we do.
It's gonna be 70 something, but it's cloudy.
Oh, bummer.
I know, it's terrible, right?
Yeah, we're back to 47 this morning, I think is our high. So,
Yeah.
It's been yeah, I'm hearing that.
well, as I was explaining to Drew, this time in the market with all the questions that are out there, consumers are just maybe overwhelmed with all the information that's available, misinformation, bad information. People just don't know what they're talking about, giving them
Sure.
information. So, what I really wanted to be able to do is share with them the idea that lenders are all supposed to be working for their best interest, right? That's the whole thing is you want to find a lender that you connect with, that you can understand what they're saying, and that you know is working for the deal for them. Just like when they choose their realtor, they want somebody that's going to listen to them and work a deal for them, right?
Right.
But a lot of times we get clients who already have a lender who's maybe online that they've never talked with and really don't have a history with. And that's where, as the realtor, we say, well, maybe it's wise for us to talk with a local lender or a lender that we have a relationship with that understands what the process is. Can you tell, from your perspective as a lender, what does it mean when you know the realtor that's involved in the deal?
I mean, well, that's great. That's a great question, Tammy. I mean, when I know the realtor involved, I know that one, I mean, they're professionals, so they've been working hard to get the phone calls to work with the people that they're working with. And when I trust the realtor, and when I can trust the realtor too, I trust the transaction is being done correctly. They're helping us with the information that we need, and it makes the process a lot easier on that side.
Yeah, Drew?
Yeah, I would say the same thing. I'd say it's partnership too, because knowing that if you, I mean, it's never a completely smooth process. And so making sure that you have clear communication through the whole thing. But having that person that you've worked with before and that you know how each other works and um, that, sometimes wanting to hear absolutely everything or maybe just wanting to hear the major benchmarks, but knowing that partnership is there and that you're both working for the same net end.
Right. And that really is the key, the communication. Like there have been multiple times over the years that with either of you, if I've had a question, I'm not sure what another lender is maybe telling the client, you guys are my go-to. I will text you or try to call or send an email. And you both have been very good about responding and giving me, hey, this might work, or here's what I would say. And if the opportunity ever comes up, and things do happen, sometimes you make that, they have that lender and then they figure out, well, that's probably not going to work in my best interest. Okay, let me go with one of your lenders. My job is to provide them with a few options, right? But so that they know these are people that I've worked with that I trust. These are people who have closed deals. These are people that are my go-to. If there is a question, they know about the situation. They know financing, they know mortgages, they know all the stuff. So with that being said, all the stuff that's going on out there right now with the mortgage rates, when we talk about the Fed cutting rates, people really automatically expect that that's going to reduce their mortgage rates. Drew, I think we've talked about this a little bit before. Give me your guys' perspective. I know you're watching market news all the time. So what do you look for to say, hey, now's the time to lock your rate?
Well, so the Fed doesn't directly impact the mortgage rate. So long-term rates are not directly impacted by the Federal Reserve movement. So that affects the short-term rates, and then there's a lot of different economic pressures that do affect mortgage rates. Personally, I mean, my big thing is that I'm not a gambler. I usually help most of my clients see if they're content with the rate as it is, that to go ahead and get it locked in, just to prevent against, you never know what's going to go on in the market. We're in the age of uncertainty from a economic and a political standpoint right now. So things could change drastically from day to day. And we've seen it happen over just the last 18 months, where we will have a major, major shift in rates, for the worse or for the better, almost overnight. And that could really impact somebody's affordability. So going ahead and locking in now and taking advantage of that. And then most lenders, I mean, we have a float down option if it's if the lock happens to qualify for it, and then just letting them know that there is a possibility if the rates do move enough that we can take the rate lower for them. So just, knowing that they're not necessarily locked in to that specific rate. They are for the most part, but it's just so much safer.
Yeah. Ben, you have anything you want to add?
Yeah, I mean, I'd agree with Drew completely with that. If you take advantage of the opportunity you have today, and if something improves, we'll take advantage of that when that happens as well. But there's so much volatility. If we were having this conversation back in September of last year, we had a 30-year fixed rate that was in the low sixes, and then it pretty quickly within a 60-day time frame went up to low to mid sevens, and now we're back to in that six, upper mid to upper six range. But you never know if something is going to change that, especially with the economic environment that we're currently in. I think all of this anticipate rates to come down slowly throughout the year, but we don't know how long that's going to be. And honestly, we've been thinking that's going to happen for the last 18 months, and it seems like it's finally going to hit that. But you take advantage of the opportunity now, and then if rates improve, then take advantage of it at that time.
Yeah, I think that's what we were seeing, was some of the lenders were offering a one-time refi, if things drop drastically after you've gotten into the mortgage and everything. So
Right.
there are ways to maybe save yourself some money in the future.
It definitely can be. I think with where rates are, I mean, and whenever anybody holding off to with the rates, anybody holding off to buy right now, and I know all of us have seen this, is anybody that waited last year because they wanted rates to come down and didn't buy. And you know what? Rates haven't really come down from where they were this time last year, but you know what has gone up is home prices. So anybody holding off, waiting for something to do that, it's cost everyone a lot more money that did that.
Yeah, I think that's a valid point. And that's really where I've started having the conversations with buyers, is that you may be buying at the higher price and paying a little bit more on the interest rate, but a market appreciation that has been taking place is at least getting money back in your pocket. If something changes and you needed to sell your house, you're not mortgage poor, right? You at least will be able to get back out of it and potentially make a little money on it. Now, hopefully that's not 30 days later that they want to sell the house to try to do that. But in the long term, when people are moving typically 3 to 5 to 7 years, everyone that I've had who's cycled back through in order to now maybe sell their property have all benefited, which makes me feel like, hey, we did the right thing when you bought, because you're not losing money. You have made money on this deal, which effectively is a win. I mean, how else is that to be construed, right?
Exactly.
Yeah.
Yeah.
So what do you think is the biggest impact coming up that we have right now? I mean, besides all the political, potential economic things that are out there, what should people be looking for to say that pulls the trigger? I mean, we're in the dead of spring season. In my opinion, we are already in the throes of it, and it's gotten busy.
Yeah.
So as a lender, what do you tell people at this point?
If you're ready to take advantage of it, because what we're
Yeah.
going to see is what we've seen the last few years, and prices are going to escalate and escalate quickly. Everything's going in multiple offers now, and there's so many folks that they're hesitant to actually be aggressive on a home that they want to buy. But when they don't get that, I've never really seen anybody upset because they paid $5,000 too much, but I've seen plenty of people who have been upset when they didn't get the home that they wanted. And everyone that feels like they overpaid in the spring, they never feel like they overpaid in the fall because prices have continued to go up. So I think for anyone, it's if you're ready in the market, if you're ready to buy, you buy. You're not waiting for prices to come down because that's not happening. You're not waiting for rates to come down because we don't know when that's going to happen and how soon. So I think it's when you're ready, you're ready.
Yeah, I agree. And I think particularly for like first-time home buyers, you're paying somebody's mortgage through rent or through your own mortgage. And I've been really, really shocked over the last few years when I ask those first-time home buyers what their current rent is and just how high rent is getting. I mean, and we're Dayton, Ohio. It's not like we're a major metropolitan area, and
Right.
our rent is extremely, extremely high. And so it's just like Ben said, it's just if now is the time, if you feel that now is the time, then it's definitely the time to get in.
Yeah, I know that rent conversation has come up a few times. And, when you're talking about a one-bedroom apartment is costing what we used to be able to get a three-bedroom house for, there's just no comparison. I see some of the rent rates and I'm like, holy moly, that mean, you're definitely paying the mortgage for somebody else and plus some. But that's where they have to do the math. So I'm good at giving them some basic ideas, but when it gets down to the nitty-gritty, I want them to be having that conversation with you as the lender, because you're going to know all the ins and outs and what everything is involved in that loan. So what people fail to realize is that it's not just based off of the purchase price and the interest rate. That's one factor, right? That's the principal and interest that's getting calculated. But then there comes into this whole conversation, the other thing that's really pushing people is property taxes. We've seen our property taxes go up in our area anywhere from 15 to 40%. And that's a huge difference. When people are talking about their property tax being what used to be the principal amount on a payment, it's kind of scary.
Yeah.
So I think, and then you factor in insurance. Those are basically the four things that come in there. And depending on what type of loan they have, there could be other factors, right? There could be private mortgage insurance. Do you want to talk anything about that? How do they avoid that?
How do they avoid private mortgage insurance, or the
Yeah.
whole thing, the taxes too? So I can comment on the taxes. So the property taxes, I know that's become a pretty big hot button in Ohio specifically. And I was just at the State House, and there were several legislators that are talking about doing something about the taxes, particularly when it comes to older folks or disabled individuals that are on fixed income. That's just the taxes going up and going up. The homestead exemption is just it's not cutting it.
Right.
And so that's a concern. But it is the fact that Ohio State legislators are aware of it, that it's gone up above the floor that is that was set in the law that they've figured out, the school systems have figured out ways around it. Again, we still have to fund the schools, so that's important too. But then as far as avoiding PMI, I talk to pretty much every client who can qualify for, say, upfront or single premium. PMI is a great way. You're still paying PMI, but you're getting it out of the way up front. It right now, it may not always make sense because of the fact that there's going to be a possibility to refinance in the near future.
Yeah.
But at least if they qualify, knowing that they have options, that's something that I've always helped my clients with, is giving them all the options so that they can make an informed decision. So it's not me saying, hey, this is what I think is best for you.
Right.
These are the options for you. And I think this one's slightly better than the other one, but you can make the decision.
Yeah, I agree.
Yeah, I'd agree with what Drew said too. There's a lot of different mortgage insurance options, but what's been amazing is over the last 10 years, single paid premium mortgage insurance to get rid of that monthly payment it made sense. The cost wasn't that much. Rates were really good, but as rates went up and the likelihood of people refinancing, that's been a little bit less in vogue. But the biggest thing is monthly mortgage insurance for a conventional loan with good credit. It's gone down so much in cost. It's really more of a non-factor than it is. It's part of the payment, obviously.
Yeah.
But it's not as big of a deal as it used to be. And what's funny is an interest rate with mortgage insurance oftentimes is just a hair better than what it is without. It's just how they're structured with Fannie Mae and Freddie Mac. And then on the same side too, if someone needs to go with a government loan, with an FHA loan, that mortgage insurance has dropped in the last few years, and that's much more affordable than it used to be. So the mortgage insurance part, I'd have it a little bit less of a hang up than I would had 10 years ago.
Okay.
It wouldn't be anything I wouldn't not buy because I don't have the down payment to get rid of the mortgage insurance. I'd really more focus on what kind of monthly payment I wanted to be at and how does that fit with the available money that you have for the down payment part.
So I have an interesting client who has a set dollar amount in her mind that she wants to pay each month. And it just reminded me so much of the car shopping stories that I've heard. You don't necessarily get the best deal from the car dealer because now they're just working off of, well, I can work you can pay for this for 20 years and yay, you got your budget amount. How do you guys approach someone like that? I mean, it's obviously heartbreaking when they get their heart set on one thing and then the numbers just can't get there no matter what I do.
Yeah. That one's a big one, and the car shopping analogy comes up a whole lot, and that's honestly one of the first questions I've got when someone calls for the first time. Like, okay, do you have a budget in mind? And sometimes they say price, but when they say price, it always comes down to what kind of monthly payment are you wanting to be at, and that's always the first question. So, how much are you actually wanting to pay besides zero? Because that's not an option. But what's the real life number? What kind of payment are you trying to be in? Great. Next question is, how much money do you have for your down payment? Great. We're going to reverse calculate that. It's not a car. We're not going to magically come up to whatever number. It's not going to do this, carry the one, and come to that magical payment. It's just math. So
Right.
we're going to reverse calculate that. And here's where your range is. And property taxes do come into play with that. Homeowners insurance has gone up so much over the last few years. And that's part of it too. But that's the accumulation of everything. And oftentimes there's going to be some products that might help a little bit. Instead of fixed rate, ARMs have been coming back really strongly over the last few months. We haven't had them in years where they made sense, but now there's sometimes, depending on the day, a half a point to 3/4 of a point better in interest rate than what a fixed rate is. And again, because we're in the general belief that interest rates are going to continue to improve over the next 12, 18 months, I really look at that as a fairly short-term loan. And the ARMs, people sometimes will feel hesitant or not comfortable with it because of that hesitancy or that possibility of that rate going up. But the likelihood of somebody having a mortgage to get today in 7 years is very, very slim.
Mm-hmm.
Yeah, and I think consistent to what Ben said about a range, where I've noticed that some of my clients will fail is when I say, okay, you told me, because I always ask, what's a comfortable monthly payment? They may be able to afford more, but what is comfortable? So they tell me $1,800, $2,000 a month. And then I say that is a sale price of X or 185, 190 or whatever, depending on the taxes. Where I've had some clients that have really been disappointed is where that they try to go higher. They try to stretch that, where they don't necessarily listen to me or to their agent and say, well, here's one, and I've got one right now that went under contract $15,000 higher than my pre-approval. It took some working to get it done. And he kept bringing me properties that were 25, 30 above what and I kept saying, you've got to stick at 180. You've got to stick at 180. And he said, well, what about this one? It's 205. And I'm like, okay, so let's take a look at that. Taxes are a little bit lower, but the big thing I also have to do, because, we're trusted advisors, I've got to say, okay, taxes might be low now because of the fact that this is a flip. It was worth $80,000 when the people who bought it flipped it, and then the value is going to go up to 205,000 when you actually buy it, and your taxes are going to go up. Are you comfortable with that? Without discouraging them or anything, but if I have a program for them, they just need to know and walk in with their eyes wide open.
Absolutely. And that's where that communication really comes in. We had John McManus on a couple of weeks ago now, again, talking about the property taxes and talking about all these variables. And we were talking about how people think, well, if taxes are higher in Montgomery County, then I'm going to move to an adjacent county, and they go and they move to the other county. Well, guess what? Not everybody's on the same cycle. Now they're getting the bills in the other county. And it's like, oh my gosh, my property taxes are as high here as what they were. I should have just stayed where I was. So we really understand, because we do this. Like, we haven't just bought one property in 30 years. We are helping people to buy and sell properties in all of these different types of markets with all of the different variables. And so that experience is really what we give and offer our clients, from the lender perspective, from the realtor's perspective, to say, I want to find the best deal for you and what meets your needs. And if you are really stuck on price and you can't move there, are you stuck on location? Because sometimes the property taxes will be less in a different neighborhood. Maybe you can get a little more house, which is really what you want, but less property taxes. But the real heartbreaking is that we have so many of our neighborhoods that have gone into these PUDs, and HOAs are now a part of this factor. So those things that we talked about as far as the financial considerations, now we're having to consider also an HOA fee. And that really can throw people out of the financing realm.
Mm-hmm.
Great. Well, anything else you guys can think is burning topics that you would like to share? Give yourselves a pitch here, or, anything you got?
Well, one thing that I can say is don't listen to the media. So the media seems to always be about a week behind, maybe 10 days. So I'll get people, well, I'll see on whatever news station you happen to be watching saying interest rates dropped. And it's always comedic, because it always seems to be that one of the news outlets will report that the day after we've had a particularly bad day with rates. And so we'll have a day that we will lose ground in rates, and rates will increase. And then the next day, without fail, the media will say rates have dropped to historic lows. Well, wait a minute. Yeah, maybe a 2-year low 10 days ago.
Right.
But so don't listen to the media, listen to your trusted advisors, because that's the thing. I think we're in a situation where too many people are trusting Facebook and any other social media and saying this is the right thing to do because some flipper on Facebook said that this is the way that they're going to do it, or HGTV, or take it all with a grain of salt. It's great resources, but listen to your agent, listen to your loan officer, your inspector, your title agent, everybody. It's a big partnership to make sure and be successful.
Right.
I think going into this whole thing, I guess it really goes back to this free market too, and really just making that decision. If it's something you're ready to do, then be prepared for it. Be comfortable with what you're paying on a monthly basis, the money you're using. And honestly, Tammy, to go back to what you were talking about with between payment and location, I'm a really big push for location versus you got to be comfortable with the payment, but there's always chances to lower the payment with a refinance, pay the mortgage down, different things, but you can't change where that home sits.
Right.
You can always improve the home, you can do that, but I think really just be ready for it, and as Drew said, trust the professionals that you're working with in this. It's what their job is, and they want to make sure that you're in a comfortable position where you're living, how much you're paying, and be ready to do that.
Yeah, I agree. Well, I appreciate you guys coming on today. I will make sure that your contact information is in the description below. So hopefully if anybody has any questions out there, Drew is here locally where I am. So he's in the Dayton region. But Ben is somewhere warmer, sunnier right now. Well, not sunny, but
I'm in a few different markets, but licensed in 20 states. So do a lot of everything.
Yes. And as I said, you are one of my people that I go to with questions because sometimes, if that client comes in and they have a different, they're coming from a different state, they have different ideas about things. Sometimes you just have to find that right connection for people. And Drew's great about answering questions. You're great about answering questions. And sometimes I just like for people to see those faces so that they know it's a real person that I'm saying, hey, use them or give them a call and see if it works out. But I appreciate you guys always being there for our clients. And we hope that there will be many more.
Absolutely. Thanks, Tammy. It was great to meet you, Ben.
Yeah, you too, Drew. Thanks, Tammy, for the opportunity.
All right, guys. Thank you so much.
Take care. Bye.
Bye.
Bye-bye.
Thanks for joining us today on the Realty Podcast. If you enjoyed the knowledge and entertainment today, please subscribe and share with your friends. We will be embarking on a journey that bridges the gap between realtors and clients, uncovering the heart and tea of real estate.